traders, welcome to the TMT stock market strategy video for Wednesday, September 28th. Well, interesting developments. We had the debate last night, actually the night before, and markets were up about 11 handles in the ES in the pre-market. Sold off to be opened down on the opening, and then rallied right back up again. So you could clearly see the manipulation that's involved in this markets. I mean, government just does not want to let the market go down. Plus, you have end of the month and end of the quarter window dressing, if you call it, if you will. And what that does is just kind of a lot of the fund managers kind of protect their position, try to jockey their position in favor for them as far as any kind of compensation that they get. So you're going to see that. You're going to see price move erratic between now and the end of the week. And then we start October, which comes into play. September, we had a little bit of volatility pickup, but I do believe that the fourth quarter is going to be pretty exciting, at least for the first couple of months before we get into the end of the year during the holiday season. So it's going to be pretty interesting, guys, to see how this market is going to end up. We have the elections in November, and it's going to be just a little over a month from now here in the U.S. And I personally believe that the Hillary Clinton win is already factored into the markets. Yes, you'll get a knee-jerk reaction. I do believe that after everything settles down, I think the markets are going to probably sell off as well as a Trump win. So I do believe that's factored in. Lots of problems in Europe. A lot of the Italian banks are in big, big trouble. We all know now that Deutsche Bank is in trouble, with Commerzbank also in trouble. Credit Suisse in trouble. So Europe is not in good shape at all. And all we need is one little bailout issue or a bailout rumor that comes into play, and you're going to see all of this start to unwind. So need to be very, very careful holding positions here going now and into the end of the year. We are in a fully valued market in the S&P. There's nothing good about owning stocks here other than trading them. That's about the only thing I can tell you. We also have to pay attention to certain key indices like the transports. I want to be watching the VIX, what the VIX is doing. VIX is at all-time lows and pretty much at historical short interest right now at these lows. So again, you can have an explosive move in the VIX at any given moment. We also want to be paying attention to the dollar, gold, and of course bonds and yields. So we're going to go right into it right now. No indicators today. Really nothing has changed. But I want to show you the daily chart, see what we're looking at, and we can try to put something together here the next coming days. Here's the UUP daily, which is the dollar ETF. I've shown this to you many times. You can see how the MACD and RSI moving nicely, making higher highs and higher lows while we're in the symmetrical triangle, trading into the apex of the symmetrical triangle. So again, it doesn't really tell you which way. I like to look at it, either let it break down or break up. We'll give it a little bit of a back test, like a bull flag or a bear flag for that matter, and then look for a move higher and or lower. But we need to get into the apex of this triangle, and until that happens, as energy is building, you're going to see an explosive move. Usually it is a continuation in the symmetrical triangle. So let's just keep patient here, be patient, and see where this is headed. Here's the TLT, it's the bonds, and you can see here that out of this big move up we had in early June, July, you could see that the indicators are deteriorating here on the daily chart. So even we had a rally spike up. Look at the MACD on this rally. Much lower than this rally here. Didn't even get above the zero line. So very weak on the rally. You see we gave it back some yesterday. I'm looking to short the TLT on any spike highs. That to me, and this is all based on fear here. So we had the fear trade go on in the bonds when the markets were kind of selling off the last couple of days. But you could see here that the rally is nothing really to write home about. So why pay attention to TLT if you guys are interested in trading the bond sector. GLD, gold, same thing. You could see that we're making lower lows and lower highs. We had a little bit of a push up here. MACD didn't really confirm this as this move happened here. I'm still looking for a flush in gold. And if the dollar does pick up steam, then as you know, the commodity sector, gold, precious metals, crude oil, the whole sector will have a hard time rallying if the U.S. dollar starts to rally. Okay, so Looking for lower prices. Got a descending triangle here, getting closer into the apex of this descending triangle. So let's see what happens. But I do looking for a flush lower, and the ultimate target would be around 120 in the GLD. Next is going to be the GDX, and you can see here same thing, just really shaping up into an apex again of this symmetrical triangle, and usually again a continuation. So I am looking for lower prices before we look to buy GDX and GLD and gold, the gold contract, whatever you like to trade. I do think that gold is in a new bull market, and not until you shake out all the week longs. That's how the market works, guys. Next is going to be the spiders, and you can see here. Look, I have this down as a symmetrical. Excuse me, as a bear flag. I mean, do you want to call it um, a rising channel? You could do that as well. That would be bullish. I'm looking at more like this is bearish to me. We were in a sideways consolidation for 2.5 months, pretty much all of July, all of August, and a good part of September. We broke down and we stayed down. So you can see these volume bars were pretty much of an inside day. Pretty much all of the rest of September had a couple big down moves, and then yesterday we had this move up, fill the gap, and then we'll see where we go. Do we get to the top of the channel and then fail, or do we just fail? As of today, do we take back the debate gains, if you will, from Hillary Clinton's win on the debate? So again, to me, this is all priced in. This is all um, propping up propaganda. That's what I've been calling it lately, in the spiders and in all of these other asset classes, all these other indices that we follow. The only reason why I say that I'm impartial. I could care less. But when you see moves that they go down and then it just doesn't stop, it just automatically stops and reverses and goes up. You could see that that they're defending certain levels, key levels here in the S&P. All right, so here's the 60-minute. You can see here we've been in this range for quite some time. And what happens? You break down, you're starting to get into another range now. So we had this little descending triangle on a 60-minute. We broke back out of it and we sold down for 3 days, and now we just kind of fill that little gap here. So we fill the gap. Where do we go? Do we challenge this area here, 117, or do we roll back down and look for 212 print, and then ultimately the 38% retracements, which is 211 and a half, and then of course the 210, which I've been showing you guys for the last couple of months. And I do think that this move lower will hit a 210 target at one point. Again, how long does it take? When? Nobody knows, but that's what I'm looking at, and that's what it seems to be setting up. Transports had a decent day. I did show you that we had an inverted head and shoulders here. Big left shoulder, head, right shoulder. Now this right shoulder continues to be a little too long in the tooth. I'm just going to dismantle that and just negate the pattern. But you can see we've been kind of consolidating here. So not looking too bad as far as the industrials are concerned. Excuse me, the transportation sector, but way, way off its highs. Not like the Nasdaq and the Russell, what's made new highs, okay, and the S&P for that matter. So our leader is not even close to making new highs. So that's something of a concern to me. IWM daily, you can see here. We have yet to fill this gap, but we did have an inside day from the previous day. But you can see again, guys, all of the indicators are pointing lower. The TMT trading model is still on a sell signal right now, has not changed. So, and what does that mean? That means that you should be selling any type of big spike rallies, and that's how that works. Okay, IWM daily Qs. Um, Strongest of all of them, and actually holding up rather well. But look at what happens here. You had the small little rally up, and then we had a big gap down. Look at these big candles. That means volatility is picking up. Volatility is here to stay, guys. At least until the fourth quarter is over. We'll see what happens. But you can see here clearly that the Qs are the leader. We want to pay attention to what the Qs does today and in the coming days. And if the Qs shows any sign of weakness, and gets back down to the low of this candle of 117.13, then the market may be in trouble as well. But right now, the Qs are holding up pretty much most of the market itself. All right, guys, have a great day. We'll see you tomorrow. Take care.